Right, so welcome everyone. So in our previous class, we got to this point where we're going to begin to take trades, right? This is very important. It's a practical session, all right? That's why we're going to be focusing a whole lot on understanding how to do this. This is a beginner class. For those who already know how to take trades, obviously the class for you is on Thursday. But for this class, this is a class for beginners, people who want to understand the basics of trading, right? And one of the core basics of trading is being able to execute trades, activate trades, right? So that's what we're going to be talking about here. It's like I said, it's a practical session. We will be entering trades, initially showing you how to buy, how to sell. You're going to download MetaTrader. If you don't have MetaTrader, please download it now. You are going to need it. This is not a class where you are just going to listen, right? No, this is a class where you're actually going to practice it, right? As you're doing that, even though you're listening on your phone or you're watching on your phone, you can always use the same phone to do the practice sessions, right? You're going to use the same phones to do the practice sessions, okay? Are we ready to go, or do we give? Okay, we'll get started. The class is being recorded, and others can join us as we progress. All right, so market execution, like I said, this is one of the core areas in trading, right? Especially when you just get into trading, one of the first things you want to do is you want to be able to activate trades. You want to be able to get into trades because you can start making money in trading even though you do not understand the markets yet. You don't know how to analyze the market. You don't know what instruments you should be trading. You can start making money if you know how to activate trades properly, right? If you know how to select your lot sizes properly, your volume properly, you know how to, you know where to put your stop loss, you know where to place your take profits, right? You know how to select instruments and bring them out and all of that. You can basically start trading and making money. On the Vantage platform here on our Telegram group, we give you signals, right? We give you signals. Now, those signals, how are you going to activate them? How are you going to use them? This is how you're going to use them. And for those who know how to use them, you can start making money if while you are taking the time to learn. Everything we do here Advantage is basically designed in such a way to help you learn while you earn, right? Because the learning journey can be quite long when it comes to mastering these several areas, the entire areas that you need to master for you to be a good trader. It could take a long time, but in the meantime, you can start making money from professionals who have been in the industry before you. Okay? So that's why we're delving into this today, and that's why this is quite important for us. All right. Now, if you have your MetaTrader account with you, please indicate, just put a one in the chat. If you don't have MetaTrader, you have MetaTrader, put a one in the chat, or put a yes in the chat. If you don't have MetaTrader, put a no in the chat. Let me make sure that the chat is active. Can make sure everybody can chat. Okay. Yes, so everybody can chat right now. Okay, Olufunso Akinwale has a MetaTrader already. Sorry if I didn't get your name correct. Apologies. Okay, Rahim Karim. Now, Rahim Karim, this is what you are going to do. You are going to go to your Play Store or App Store. So whatever, if you're using yeah, MetaTrader 5, please. They also says I don't have. Now, for those of you who do not have MetaTrader, what you need to do is this. Whether you have an iPhone or an Android, just go to your Play Store right now or your App Store. Now, if you have, great, that's fine. But I'm talking about those who don't have. Go to your App Store and Play Store right now. Download MetaTrader 5. MetaTrader 5. Right? MetaTrader 5. Hold on here. Let me make sure I'm giving you. Okay. Okay. So if you can see my screen right now, MetaTrader. MetaTrader. Can you see this? MetaTrader 5. This is what you're going to search for on your App Store or Play Store. Once you have found MetaTrader 5, MetaTrader 5, once you have found MetaTrader 5, please download it. Download it. Please download it. So I'm going to be sharing my screen so that I can show you guys some things. Okay. All right. So let me know if you have downloaded the app. Let me know if you've downloaded it. If you've downloaded it, please indicate in the chat. Just say I have. Okay, done. Okay, you downloaded it, right? So once you download it, I'm sure you can see my screen now. Once you download it, on the you should see something like create an account or open an account or something, right? Click on it. Once you click on it right now. Once you click on it, um, it should take you to, okay, once you click on it, it should take you to an area where it's asking you probably to find brokers, right? Find brokers. When you want to find brokers, please search for meta quotes. See this? Meta quotes. Meta quotes is the last one there, right? Click on meta quotes. Click on meta quotes. Once you have found meta quotes, then click on open a demo account. You can see my screen right now. That's what it is. Click on open a demo account, and then you fill out the details that you see there. So let's get to work with this quickly. Can you see my screen, please? Please see my screen went blank. You can see my screen. Oh, okay. My screen has been on. Is it the MetaTrader doesn't allow? Okay. MetaTrader app hidden from screen. Okay. It says the app is hidden from screen. Okay. Since the app is hidden from screen, I can tell you what you need to see. All right. Now, once you've downloaded it, click on open an account. Once you click on open an account, it should take you to where it's asking you to impute your broker, find broker, something like that. Find broker, find company. Then put meta quotes there. Meta quotes. Look at the meta quotes here. Meta quotes. Okay, it's the last one on this page right now. Meta quotes. Okay. Once you put meta quotes there, meta quotes, then you'll now be able to you click on open a demo account. Open a demo account. This is how we are going to practice what we want to practice. Open a demo account. Open a demo account. Then you'll be able to Once you click on open a demo account, it will ask you for first name, second name, birth name, and all that. Just fill out all that information there. Then click on register. Click on accept, then register. Click on accept and register. Please let me know where you are. Are you getting what I'm saying? Oh, we can't hear. Can you hear me, please? Someone is saying they can't hear me. Can you hear me? Yes. Okay, you can. Please, if you can't hear me, check your internet connection. Usually, internet connection can be the reason why you can't hear me. Okay. Okay. Can I quickly do that? I'll share my screen again shortly. Okay. Someone is there. So if you have any questions, please let me know. Any questions there? If you have any questions there, please let me know. Okay. Connecting at it's connecting at the meta code. So when you click on meta codes, right? Okay, done. All right, that's good. Now just hold on. Once that is done, then you will see to the bottom of your screen, you will see quotes, chat, quotes, chat, trade, history, quotes, chat, trade, history. That's what you will see on your chart. You'll see quotes, charts, trade, history, and messages. So let's give another 5 minutes for everybody to complete this. I said this is a practical session. You have to do this. You have to do this. If you're in this session, if you're in this class right now, you have to do this. So if you have any questions, please drop it in the chat here. Let me see you. If you have any questions, please drop it in the chat here. questions, please drop it in the chat so I can respond to it. Okay. So are we ready right now? Are we ready? If you're ready, please give me a one in the chat. If you're ready to get started, give me a one in the chat. Okay. One. I want to see more ones, to see more people ready for this. I see a lot of you guys here right now. I want you, like I said, for those who are just joining, this is a practical session. Okay. No, it's a demo trade, please. The demo trade. This is not real. This is for this is you have to practice first before you get on a live account. You have to practice first. You don't want to use your real money to practice, please. That's why I'm showing you how to set up a demo account. Then for those who already have MetaTrader, so I didn't go through that. For those who already have MetaTrader, you can see my screen right now, right? Then we'll go to quotes. To the bottom of the screen there, you see quotes, you see charts, you see um, charts, you see trade, you see history, you see messages. MetaTrader is updating a whole lot of things. Where you're seeing the amount there, your capital amounts, is the account size. That used to be where you see trade, right? So MT5 is updating a lot of things. So if you already have MetaTrader on your phone, so for you to set up a new demo account just for this practice, this is how you do it. You look at my screen and then follow through. Look at my screen and then follow, right? So we'll click here. Someone is typing what it is. I've noticed that most of the trades open this week. The market is going. Oh, a lot of the trades we've had this week are actually profitable, right? So where are you on the Telegram? Which Telegram are you? So let's talk about that after the class. Um, so now you are here, right? You can see my screen. If you already, this is for those who already have MetaTrader. They already have MetaTrader. If you already have MetaTrader, this is the process, right? Now you look to the top left-hand side of your screen, of my screen right now, or of your screen. Look to the top left-hand side of your screen. You will see quotes there, and you will see three bars. Three bars. Click on those three bars. This is for Android, basically, right? And this is for Android, basically. Now, for iPhone, to the bottom of the screen, you will see settings. To the bottom right, you will see settings. To the bottom right, you will see settings, right? If you're on an iPhone. But if you're on Android, this is what you do. You look to the top left-hand side of the screen, click on it, then click on Manage Accounts. Manage Accounts, okay? Once you click on Manage Account, then you see a plus sign to the top right-hand side, plus sign. Click on that plus sign, okay? Once you click on that plus sign, then it brings out the servers that are there. What you need to do then is you are going to select meta quote. So you come back to what we talked about before. Click on meta quotes. Then now you click on demo account and then fill out those details. It will create for you a different demo account for you to use for this practice. Make sure you are not doing this on your live account because this is a practice, the practice session. So it's not like we're giving you buy here, sell here trades right now. Okay, we have time for that. We'll announce that. Well, we have a plan for that where we can trade live with you guys. Right? So, but this is not the session for that. This is not the time for that. Right? Click on demo account, open a demo account, fill out the details that are there, and then click on register, accept and register, and then you have your account. Okay. Now let's go to the account. Let's go to what we have here. Right. Before we do this, let me quickly go back to the slide I was showing earlier so that I can quickly go through that. Then we'll come to the app and start to enter these trades, right? So this is where we were before, right? So we see that there are two types of orders, market orders. There are two types of market order. We said that we're dealing with market orders today. We're learning how to activate trades. Now, that's what we're doing today. So we have two types of market orders. We have the market execution, also known as instant execution. Then we have pending orders. Now, for market execution, what to do with that? We're going to practice that as well for those who are new here. Well, with market execution, it means that you are entering the market right now for a buy or a sell. It means that you are taking a trade and you are activating it at this moment for a buy or a sell. Okay, that's what we call market execution. You are activating the trade right now. Then for pending orders, the way that works is that you are going to set a trade that will be active sometime in the future. Why is that important? Why is that so? For market execution, it means that at the time you come to the chart, your trade is already ready to buy or sell. Remember, we enter the market when we expect the price to rise for a buy, and we enter the market for a sell when we expect the price to drop, right? Now, for market execution, these conditions have already lined up. You're already at a point where you are expecting the market to rise. So you click on buy at that moment, right? Now, for a sell trade, you're at a point where you're already expecting the price to drop, right? So you click on sell at that moment. That's what we call market execution. But in the case of a pending order, which is what you experience most of the time, you will notice that the market will not have reached an area where you are expecting where price should buy or sell. So if you come to the chart on a daily basis, come to the market on a daily basis, most of the time, the market will not be ready for a buy or a sell trade immediately. For most days, the market will not be ready for a buy or a sell immediately. In fact, probably more than 90% of the time, when you open your chart in a day, open the market in a day, the market will not be ready for a buy or a sell at that moment. But if you understand what we call analysis is basically the study of price to determine where you should be entering for a buy or a sell. Okay, analysis is the study of price where you're determining where you should be entering the market for a buy or a sell. At what price will it be good for the market to buy? At what price will it be good for the market to sell? That's what you're trying to figure out. Now, most of the time, like I said, when you come into the market will be moving. You can see probably the trend of the market. You can say, oh, the market is about to buy right now. The market is buying, or the market is about to sell, or the market is selling. I want to place a trade, but I would expect price to reach a certain level before I buy. I expect the market to buy, but at this point where it is right now, I don't think it's the right time to buy. This is something you experience in even general business. There are times, if for example, if you are someone that does, this is very popular in Nigeria. I don't know, a lot of you guys might be, some of you guys might be from other countries like South Africa, Ghana, and the rest of them. But this is quite popular in Nigeria. I don't know if it happens elsewhere. You can tell me if it does. Now, if there are people that do seasonal business, right? So they want to sell a certain commodity at a certain time of the year. Let's say they want to sell bags of rice during the festive period, which is Christmas period, December, right? So what they usually would do is months and months ahead, maybe 5, 6 months ahead, they buy those bags of rice, those cooking um, ingredients, as it were, right? Rice, oil, like the ones that are not perishable, basically. They buy them and then they keep them in certain stores. The goal is for them to sell at a higher price when everybody starts to buy it. The goal is for them to sell it for a higher price at the time that everybody is rushing for it, which is during the festive period. And then they'll be able to make good profit off of it, right? That is the goal. Now, when they've bought it, they know when they buy it. When they buy it, they keep it. By the time it's Christmas, it's December, that's not the time to buy anymore because that is the time to take profits. That is the time for those who bought, that's the time to cash their profits. For those who didn't buy, that opportunity is gone. They wait for the next one. That is what we're talking about here. So you look at the market and you determine that price is going to get to a certain point before I buy. The market is going to get to a certain level before I sell. So that's you can see that that is a trade that you're expecting, but it's a trade that is meant to be active in the future. Now, there are two ways to approach such a trade. You wait on the chart in the market, you wait and wait and wait until price eventually gets there. Then you activate a buy or sell trade manually, which is you do a market execution. So you do a market execution for either a buy or a sell after waiting for price to get to that point. Now, another way to do it, which may be more effective depending on how busy you are, is that you set a pending order for that level. So I'm expecting price is currently at 1.2. I'm expecting price to come to 2.5 before I make a sell because I'm expecting price to sell, but price is currently making a little buy right now because we know the market doesn't go up or come down in straight lines, right? So market is pushing up a little, but I can see that the overall trend is a sell. So I want to place my sell trade at 2.5. Price is currently at 1.5 right now. I want price to still move up a little to 2.5 before I make a sell trade. And then that sell should take price back to 1.0. So at this time, what you do is you set a pending order at 2.5. That's where you want to get into the market. You set a pending order at 2.5. And remember, that pending order is what is a sell trade. So you're going to set one of these pending orders, one of these two sell orders, sell pending orders for 2.5, so that when price gets there, instead of you to sit down and be waiting for price to get to 2.5 before you activate your sell, you can set a pending order there. Once you set a pending order there, when price gets there, it automatically gets activated. Automatically, your trade is activated. And of course, if you have set your stop loss, take profit, you literally can't do anything or don't need to do anything about that trade anymore. You literally do not have to do anything about that trade anymore. All right. So now that is what this is. So there are two types of pending orders, like we'll look at here. We have the stop orders, and then we have the limit orders. This is why this is actually a practical session, because you need to know how this works. Okay. First of all, the market execution has to do with just buy and sell now. We'll go there shortly. Now, you have buy stop and sell stop. You have buy limits and sell limits. So the left-hand side is what we call the stop orders. So under the stop orders, you have the buy stop and sell stop. Then for the limit orders, you have them as buy limit and sell limit. So for the stop orders, we call them continuation orders, which means that for the stop orders, you are expecting price to continue in the direction it's already going. That's a buy stop order or a sell stop order. You are expecting price to continue in the direction that is already going. That's a continuation order. So price is buying. You expect it to continue to go higher. You place a buy stop. So price gets from this. Let's look at this now. Let me illustrate it from here. So you have a blue ball right here, right? This is where price currently is at. But you are expecting price to rise to this green area, activate and continue going up. So your outlook for price in this scenario is that price is going to continue to buy. That is your outlook. Okay. Now, what you do is that price is currently at the blue ball, right? Now you set, let's say this blue ball is 1.5. And then where the green area here is 2.5. And you expect price to continue to move from there all the way to maybe 5.0 or 6.0 or 7.0. You expect your outlook is that price is going higher. Okay. So what you then do is that you take your phone, which we're going to do shortly. You take your phone, you click on the instrument you want to buy or sell. In this case, is a buy. You click on the instrument you want to trade. You go to new order or trade. If you're using Android, you will see new order. If you're using iOS, you see trade. So click on trade or new order. Now, once you click on that, you will now be able to select the price level that you want price to get to. Then select buy stop, and then you click on buy stop. Okay, and then all you need to do is once you place that trade is waiting until price gets to that level. Remember, price is at 1.5. We expect price to go to 2.5 before that trade becomes active. So you just wait. At the time you have set that trade, all you need to do at that time is just wait. You do nothing anymore. Okay. So sell stop is the same thing. Then for buy limits, the way this works, we call this reversal orders. Why we call them reversal orders is this. Why we call them reversal orders is this, right? Price is currently at the blue area here, at the blue ball. That's where price currently is. Okay. Now, you can see that price, you are expecting price to buy. This is your goal now. Remember, when you have buy limit, sell limit, buy stop, sell stop, the key word here is either buy or sell. Buy or sell. The other one is just direction. Okay. So buy or sell is what you are looking for. All right. So now, in this case, you are talking about buy limits. Price is currently at this blue area right here, right? It's currently at this blue area right here, right? But you're expecting it to buy. This is what you're expecting to happen. You're expecting a buy trade. But at the point where price currently is, which is the blue area, price is not at a level where you want to buy yet. You don't want to buy yet. Okay? So let's say this level right now where price is 1.5 is on a scale is 1.5, right? But you expect price to come down to the 1.0 before it buys and goes higher. In that case, you are setting a trade to activate at a later point, at a later time. But the area where you want it to activate is an area that is currently lower than the current market price. Remember, What's current market price? Current market price is the current price of that trade right now. When you go to your chart, you will see this. The price where the area in the market where price currently is what we call the current market price. So if you're using a market execution to enter the market execution is instant order, right? If you enter for a buy or a sell at that time, you are trading at the current market price. So market execution is trading at current market price. And that's the reason we call it market execution. Market execution because it's executing at the current market rate, at the current market price. Okay? So that's buy limit. Then sell limit is the opposite of that. You are expecting price to sell, but where price currently is at is not a good enough point. So there are two areas in the market. This is something that you will teach you guys much later. There are two areas in the market on every chart we call premium and discount. Just like in the regular business, premium and discount. When the price of something is at a manageable point, for example, you're a business person, right? And you want to make profit out of something, you buy it for a discount. So if you want to sell shoes, you look for a place where you can get them at a discount. When you get them at a discount, it means that you can then go elsewhere and resell at a premium. You resell it and then you take the profits. But when price is currently at premium, you cannot do anything with premium price. Price has to drop to discount. Then you buy or sell from discount. So you always need to buy or sell from discount levels in the market. You don't touch price when it's at premium. So premium means overpriced. Premium means the price is too high or the price is too low. If you are buying, premium means that the price is too high. If you are selling, premium means that the price is too low. Okay? So this is how it is. If you are buying, discount means that the price is currently low, which means you can buy low and sell high. If you are buying, discount means that the price is currently low, which means you're meant to buy low and sell high. If you are selling, discount means that the price is currently high. You want to sell it at a high price, place a sell at a high point, and once price starts to drop, you are making profit from that. Okay? So that's what you're looking to do. So in this case right now, what we have here, you want price to sell from this red zone, but price is currently here right now, this blue area. So you consider that this blue area is not a good enough place to take price. So you set a pending order, a sell limit order to be at the red zone. You set a sell limit order at the red zone so that once price gets there and it activates it, then price would sell and then you make profit from that. Okay, so I'm going to share my screen right now on my phone so that we can get to so we can start, we can practice this. Okay, give me 1 minute. Okay, so this is our chart right now. Okay, so once you open your chart, we've already gone through MetaTrader and all that, so we're ready right now, right? Okay. So once we're ready to enter a trade, we talked about different types of trade entries now. We said the market execution, then we talked about pending orders. And then for pending orders, we talked about buy uh, stop orders and limit orders, right? So we have buy stop, sell stop, we have buy limit, sell limits. We have buy stop, sell stop, we have buy limit, sell limit, right? Okay. So if that's the case, then we need to then we want to test out here. We want to do some trading here so that we can know what we should be doing. Okay. Now for market execution, let's say here right now, look at under quotes right now, we have different instruments. We have Euro USD, AUD CHN, then XAU USD, GBP USD, right? So these are the instruments we have here right now that we want to trade. These are the instruments we have right here that we want to trade, right? Now, if you don't have any of these instruments right here, what you can do is add it. Let's say we want to add USD JPY. USD JPY, right? USD JPY is what we want to add here right now. It's not currently here. We want to add it. So what we do is that we'll click on you see the plus sign. Make sure you're on quotes. Okay. You see the plus sign to the top right-hand side of the screen there. Click on it. You select, you search for a USD JPY. Usually you search for it using the first four letters of the instrument. The first four letters of the instrument. So what we'll do here is I'll go again. When you come to quotes, come to the top right-hand side of the screen, you see a plus sign, right? Click on the plus sign, okay? And you see it says find symbols. What you do then is you search USD JPY. Usually you use the first four letters, right, of the instrument to search. Once you input the first four USDJ, it pops up, right? You will see it there. Then you will click on there's a plus sign to the right. Click on that plus sign. See, it checks now. It means that this instrument has been added to the watch list. For limit orders, is it advisable to use stop loss for small size account, example, $10? Okay, just hold on. I'll get to all that, right? Let's practice this first, right? Everybody's not at the same level here. Some people need to know how to take these trades first, right? I'll come to risk management with every trade. Okay. So now when we come here, what do you see? It looks like we have added that instrument. We've added it already. We've added it. That's why it's now part of what we have here. USD JPY was not there before, but now we see that it is there now, right? Okay, good. It's there now. All right. Now, first thing we want to do is we want to activate instant orders, market execution. So let's pick USD. Let's pick USD Euro USD here. Click on it. We'll click on. Once you click on Euro USD, what do you see? You see the new order. Or in this case, let me pick AUDCN. Click on that. Click on new order. Now, when I click on new order, you notice to the top of the screen, you see market execution. And then just below it, there is a number that is in white, 0.01. There's a number that's in white, 0.01. That 0.01 is what we call our lot size. The lot size is to understand the lot size, think of it like the volume you are buying or selling, the quantity you're buying or selling of any instrument, right? The quantity you're buying or selling. Let's say, for example, you go to a fuel station and you want to buy fuel, right? What is the quantity you are buying? Whatever it is you want to buy, what is the quantity? What quantity are you buying? Remember, in this market, you're either buying or selling, right? The question is, now that you're placing a buy or a sell trade, what is the quantity of that trade? That's what lot sizes represent, right? That's what lot sizes represent. When it's 0.01, we call that the micro lot. That's the micro lot. All right, micro lot. Then if it's 0.10 all the way to 0.99, we call that a mini lot. Okay, 0.01 to 0.09, that is micro lot. 0.01 to 0.09, that's micro lot. Okay, if you don't know this already, this is the time to take it out. Then that's one category. Next category, 0.10 all the way to 0.99. 0.99. That gives you what we call the mini lot. Mini lot. Then the next one is what we call the standard lot. From 1.0 and above is what we call the standard lot. Okay. Now in this case, let's stick to the lowest volume here because we are practicing, right? So we're entering this trade AUDCNH for a let's say we're entering for a buy. This is a random instrument. I've never placed a trade on this before actually, but this is for the purpose of us learning how to execute trades. So if I wanted to enter this trade, you can see market execution at the top. All I need to do is you can see buy by market, sell by market. Buy by market, sell by market. All you need to do in this case is click on buy for a buy trade. You see, our buy trade has activated. Simple. Our buy trade just activated. That is what we call a market execution trade. Market execution trade. So we didn't do anything. All we need to do is click buy or sell. Depending on where we think price should go, we just click on buy or sell. That's fine. That's all we need to do. Okay. Right. So that's just the way it is. Now, the next category is the category we call pending orders. And that is very important because that is what our focus is on. That is what we are focusing on. Okay? That's what we are focusing on. The focus for us is on pending orders. Pending orders. Now, the reason why we're focusing more on pending orders is because it's easier to do instant execution. You can easily go and buy or sell. But for pending orders, you need to really understand it better. All right? Okay. Even though both of them are good, both of them are great, both of them are used, we're using both of them every time. Whether it's pending order or it's instant execution, we're using both of them constantly. All right? Now, let's look at this. So we pick EUR USD. EUR USD, we come to charts. Once we click on it, we come to charts. We click on it, we come to charts, right? This is the chart for EUR USD. Now for EUR USD, we're expecting, so price, this is where price is right now. Price is currently at 1.14322. That's the current market price. You can see it's in blue. It's in blue. Is that blue or green? It's in, I would say light green. The number is in light green and it's showing up on the right. 1.14323. Okay, it's changing, of course, because price is moving, but that is the current market price. So we are expecting price to continue to sell. But as much as we're expecting price to continue to sell, we think that price should come down to, we think that price should come down to 1 point, okay, hold on, let me change this color up. Let me change the color here so that we will be able to see what I'm showing. Right. Okay. See. All right. So now this is our white line. Now we are expecting, based on our analysis, remember this is analysis, right? You have looked at the market, you have seen that the market is going a certain way, right? Now, you look at this chart and you are thinking, oh, price needs to, I'm expecting price to continue downwards, but I want to activate this trade when price gets to the the white line. So this white line here is the 1.14067. 1.14067. That is the price right now. 1.14067. That is not the price right now. That is where we expect price to get to. When price gets there, I want my trade to become active. So what I will do then is I will set a sell limit, a sell stop. Why am I selling a sell stop? Because it's a continuation. Price is already selling. I'm expecting it to continue to sell. So since price is selling, I'm expecting to continue to sell. I will set a sell stop order at 1.14067. Okay, 1.14067. So how do I do that? I come to quotes, click on quotes. I click on quotes. Then I click on EUR USD again. I click on new order. New order. Then you see where it shows market execution. Market execution. I click on that. I change that to sell stop. Remember, that's what we said we are doing. We are doing sell stop. So we click on sell stop. Sell stop. Sell stop. Now you notice something. When we click on sell stop, it's asking us for price. When we did market execution for a buy, it did not ask us for price, which means that it's expected that we're activating our current market price. But now that we're not activating our current market price, it's asking us for price. So this is why we take note of price. Whenever you are doing a pending order, you must take note of the price at which you want the trade to be activated. Always take note of the price, right? Okay. So we said 1.14067. That is our sell stop price. So what we'll do then is, you see, it's showing us place. We click on place. Okay, that is place. We have placed the trade now. We have placed the trade. So you can see there is place. Place means that it's pending. It is not active as yet. It is not active as yet because price has not gotten to that point. When price gets there, it will become an active trade. You can see what we have there right now. We have an active trade at the top. We have a pending trade at the bottom. So when price gets to this number now, 1.14067, it will become an active trade, just like the one we have currently running. Okay. Now, something you have to note is that when for every trade that you set, you want to enter, look at it. Look at this now. You have a trade. You have a price where you enter the market. Then you have to the left-hand side, you see SL and TP. SL and TP. SL and TP is SL means stop loss, TP means take profit. These are orders. They are orders that you give the market to help you manage your trade, manage your risk, manage your funds, manage your trading situation, basically, right? SL and TP are mainly used for risk management. Okay, they are mainly used for risk management. So, which means that the way trading works is that out of 10 trades that you take, you don't need to be profitable on 10 of them for you to make money. No, that's not the way it works. If you are profitable on 6, 7, 8 out of 10, you can still be very profitable. So because of that, you want to make sure that you preserve your money for trades that are going to do well. If a trade is going to do badly, which means the trade is going to lose money, you don't want to risk your entire capital on that trade. That's the reason why you never risk your entire capital on any one single trade. No, you don't do that. You take the monies you have in your account, you decide that you're going to risk a percentage of that money on every trade. So, for example, you have $1,000 on this account and you are risking, let's say, $20 on this trade. you have to have a stop loss. A stop loss is the instruction you are giving this market to close you out at $20. Oh, I'm risking $20 on this trade. I don't want to go below that. If it goes against me, close me out at $20. The stop loss is that instruction that makes that $20 loss, right? Where your account is preserved at $20 after $20 is taken out. That instruction is what we call stop loss. It helps to stop your loss. But if you don't use a stop loss, what that means is that your account continues to lose money. You continue to bleed money. You are telling the markets to take all your funds away. That's what you are doing when you don't use a stop. So for the person asking me whether it's advisable to use a stop loss on a small account, this is what I will say. Don't trade with $10. I'll be very, very, very frank with you to tell you that $10 is enough for you. It is absolutely not enough. It's not. Right? I was talking to someone at the office today about this same thing. He was telling me how that he will fund $10, he will fund, you lose, you fund, you lose, you fund, you lose, you fund, you lose. I told him he hadn't told me how much he was funding. He said there are days he will fund $10 5 times, and then he will be losing them. I told him, I said, the first thing you must do is you must stop funding $10. Or fund at least $100. When you have $100 in your account, that's when we start making money. You know why? Number one, what's the first thing you want to do in your account? You want to protect your funds. If you don't have a good amount of funds in your account, you will not be able to do proper risk management. I know you have seen people split $10 to $20 to $50 to $100. But the truth is that what you are saying is that it might have taken them 20 times. I saw a guy the other day. He said he was trying to flip, I say 100,000 to 20 million or something like that. He said this is his 20th time trying this thing. So that means he found 100,000, you blow it. He's trying to take one trade that will make his account 100x. But if he's now able to do it once, or maybe he's able to do 10x, he will now start showing you that, oh, I have turned $10 to $100. But you don't know that he probably has lost more than $100 trying to do that. From an experienced trader, I will tell you, don't trade with $10. It's too small. It's easy for you to lose it. So for that reason, increase your deposit, right? Because even if you're using $10, how are you going to do proper risk management? Where's your stop loss going to be? How much of that $10 are you going to risk? I was telling the same person, I said, if you lose $5 out of $10, just know that the rest of the money is gone because you'll be demoralized. You've already lost 50% of your money. But if it's on $100 or $200 in your account, if you lose 50 or if you lose 10, you lose $5 or $10, you are good. You know that you can take the next trade and recover it, or the next two trades and recover it. Because there are times where you might take 2 or 3 trades in a row and you lose, and it looks as if that's the end. No, but that's not the end. The trade is a market, is a place of probabilities. So let's say in 10 trades, you're going to be profitable on 7. But the truth is that the order in which that 7 will come, you don't know. It might be that you took the first 7 trades and you win. You're profitable. It could be that you take the first 3 trades and you lose the first 3 trades. Then on the fourth one, you will not be profitable. That is the order we don't know when we trade. We don't know that order. So that's the reason why I will personally, my candid advice to you is don't trade with $10. The chances that you will lose it is very, very high. And you fund $10, you lose it so many times, you start to think like it's not possible to make money in the market. But the number one problem you have is that your capital is too small. And then it is impossible for you to so this is the source of this, right? Now let's try and do something else. Let's try and do something else. That's a sell stop order. Then for a buy stop order, let's try and use What instrument do I use now? Let me pick USDJPY. We're running out. Okay, all right. So now this is USDJPY, right? This is USDJPY. Price is rising right now, and I'm expecting price to continue to rise. Okay, so what do? I tell myself that I expect price to continue to rise from here. So I put my price somewhere here, 162.627, 162.267, 162.267. So I'm expecting price to rise to this level, this white line, and then break it and continue going. So I use what we call is buy stop order. Buy stop order. So how do I do that? I come to quotes. I click on USD JPY. I click on USD JPY. I click on new order. To the top of the screen there, I see market execution. So I click there. I change it to what? Buy stop. Buy stop. So what's the price? Now it's asking me for price. So I put there 162.267. Right? Once I've done that, what do? I select my stop loss and my take profit. So you must make sure you take a trade. You must make sure you take a trade that has stop loss and take profit. If the trade doesn't have stop loss and take profit, please avoid it because the risk on that trade is too high for you. All right. So you put a stop loss here. So let's say we put a stop loss here of 162.10. That's our stop loss. Our take profit is 162.400. That's our stop loss and take profit, right? We click on place. Now we have placed our trade. Okay, so we have our entry here at the white line. We have our take profit. We have our take profit. Sorry. So we have our take profit at the top there, 162.400. Then we have stop loss at 162.100. So this is how you set a trade. You set a trade here like this, and then you are ready for that trade. So this is how you set a pending order trade. Make sure every trade you take has a stop loss and a take profit. Now, let's quickly do this. Now, we can take another trade here. Let's check this. Let's look for a trade where we can do like a buy limits. Okay. So this trade now, this is USD, this is GBP USD. Let's say GBP USD is currently selling, but you look at the overall trend of GBP and you think it's going to buy. Okay. So what you do now is you put your line somewhere here, and you're like, okay, I want price USD. I'm expecting USD GBP USD to buy from 1.33660. So let's do this as 660 for easy ease. So 1.33660 is our buy. We expect price to hit here and then buy and go up. So we use in this case, remember, we want to buy, but we think that price has not gotten to the point where you should buy yet. So in this case, remember, price is selling now, but we're expecting it to buy. For the other ones, price was buying, we expect more buys. But for sell stop, price was selling, we expect more sales. In this case now, we're expecting a reversal. Price is selling, but we're expecting price to reverse and start buying from 1.33600, right? So what we do now is we come to GBP USD, we click on it, we click on new order, then we go to market execution, click on that, and we click on what? Buy limits. Now it's asking us for price. So what's the price? 1.33, 1.33660. That is our entry price. What's our stop loss? So we'll pick our stop loss 1.33550. We'll take that as a stop loss. Then our take profit, we'll click on 1.33770. That's our take profit. So we click on place. We have placed the trade. Okay, so you can see 3 trades we've already placed now. Sell stop, buy limit. Then let's place the last one, sell limit. Okay. What instrument do we do now? Let's use we use gold. Okay, so let's use gold here. Sell limit. Now, look at this, right? This is gold, and for this gold trade, we are expecting price. For this gold trade, we're expecting price to sell. Well, we're looking to take a sell limit now, sell limit trade, right? A sell limit trade. But then why are we taking a sell limit trade? We're taking a sell limit trade because we expect price to continue to sell. We expect price to continue to sell. 1 minute, guys. Okay. Okay. So we're expecting price to continue to sell. So in this case, what we do is that we look at this and we're like, okay, price is currently too low right now. Price is currently too low right now. What we want to do is that we want it to come up, then buy. So we want it to come up and then sell. So what we do is we bring this here, we bring this this line here. We expect price to go up and then sell, continue selling, right? Because we think that price is in a downtrend, right? Now, our stop loss will be, let's see at the top here, while our take profit, so our take profit, remember, we're expecting a sell, so we're expecting our take profit to come below the current price where we are entering the market, right? So our sell limit price is going to be at 4076.31. 4076.31. So we'll come to quotes, click on quotes. Then we come to XAU USD, we click on that. And then we click on new order. What do? We go to market execution, click on sell limits. Then what's that again? 404031, I think. No. 4091, I think. Then 0.30. Then sell limit will be stop loss will be as 4102. Then take profit will be at 4050. We click on it, place. Now we have successfully placed 4 trades: sell stop, buy stop, sell limit, and buy limit. So what you need to do, guys, is that you need to go and practice this. First of all, before you use it, go and practice it. All right. So he said, I saw all your trades were on 15-minute time frame. It's 5 minutes. It's 5 minutes to 1. Try the best time frame. Now the thing is this, right? 5-minute time frame is a low time frame. 1 minute is a very low time frame as well. You can take trades from them as well. But if you want to be able to understand, by the way, this is just practice, okay? But if you want to be able to understand the chart from a higher time frame, you start with a higher time frame, right? That's where you see more clarity. But this is for practice. You can actually take your trades from anywhere, 5 minutes, 1 minute, anywhere, right? For me, I don't really go that low because I don't see a lot of clarity there. So that's why I use a bit of a higher time frame, 15 minutes, 1 hour, and so on and so forth, right? But then that doesn't negate you using 1 minute or 5 minutes. You can enter the market using 1 minute or 5 minutes. Sometimes I use 5 minutes as well, not just all the time, right? Sometimes I use 5 minutes as well, not all the time. But then you can definitely do that. There's no problem with that at all. Okay. So this is what we're going to end our class today. This recording of this class is going to be sent out into the group. We'll put it on YouTube and send it out to the group, and then you'll be able to go over it again. Please let's go and practice this first. If this is your first time in taking this kind of trades, please make sure that you practice this. Okay, for the slide, let me see. Let me stop this sharing. Let me stop sharing. Stop sharing. And then let me quickly share this for 1 minute for those who want to see this. 1 minute. Okay, so this is this one. If this is what you're asking, this is it. Okay. So yeah, so we'll end our class here today, and then we'll continue our class again on Tuesday. On Thursday is a different class, an intermediate class. So if you're going to be on that class, fine. But Tuesday is when we'll continue our beginner classes again. All right. Thank you very much. And we're going to have to stop now. We're out of time. See you guys on the next class.